Will Bitcoin hit a top this cycle and then crash? Is that something you need to worry about? How will you know if or when that might happen? Let's talk about it. Okay, so historically, Bitcoin's gone in 4-year cycles with 3 up years, 1 down year, 3 up years, 1 down year, 3 up years, 1 down year. The peak of each of those up years was 2013, 2017, 2021, and if that pattern continues, you would expect that to be 2025. Now, the reason for those waves is natural technological adoption, which happens to sync up in this case with what's called the Bitcoin halving, which happens the year of the presidential elections. So every 4 years, the amount of new Bitcoin that is released onto the market as it gets closer and closer to 21 million, with 21 million being the hard cap, drops in half. So right now there's about 20 million Bitcoin in circulation, and the remaining 5%, which is the remaining one of the 21 million Bitcoin, will be released into circulation, which is mined. It will be mined by the Bitcoin miners between now and the year 2140, which is 115 years from now, 115. So the last 5% very, 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 very slowly is released into the marketplace over the next 115 years as a reward to Bitcoin miners. After that, the Bitcoin miners transition entirely to fees from the Bitcoin network. Right now, it's a mix of the two. Well, every 4 years, the amount of new Bitcoin released into the market every 10 minutes drops in half. And usually the year after that Bitcoin halving, you see a significant bull run, meaning an optimistic run that's caused by the decrease in the supply of Bitcoin, which finally is felt by the market. It's usually a time delay there. So usually it kicks in, 6 to 9 months after the halving, you start getting a bull run, and then it runs significantly through typically the end of October or early November of the year after the halving, which would be 2025, which is this year. Now, people have been, some people think that 4-year cycle is going to continue. Others think the 4-year cycle is over because now there is enough adoption that Bitcoin's just not going to do 4-year cycles. Now, does that mean there's a bad time to invest in Bitcoin? Well, obviously, the closer to the peak of the price of Bitcoin, the longer you have to wait to be in profit on your investment. So if you were investing essentially, for example, at any time in the end of 2022 or 2023, you only had to wait for a few months to be in profit on your investment. And the likelihood that Bitcoin ever goes back to those prices is essentially zero. But the closer in those 3 up years, the farther toward the end of those 3 up years, the closer you get to a potential correction. So if you think of those 3 up years like a baseball game, and a baseball game has 9 innings, 3 innings per year, then we're sort of in the, seventh, let's call it seventh or eighth inning out of nine. Okay, because we're in the third year, which is 2025, and we're, halfway through it. But the big difference here, give me 1 second. The big difference is we have much more adoption than we used to in the marketplace. And at some point, the halvings are small enough and the adoption is large enough that we're just not going to do 4-year cycles anymore. Now, will we have a 4-year cycle this time, or are 4-year cycles officially done? I would say 50-50 chance of the two. So what do we do not knowing if it's a 50-50 chance we'll have a big correction or not? Well, the number one thing you can do is subscribe to James Check's newsletter, Check on Chain, which I post periodically. He specializes in doing the analytics of human behavior that detect if you're close to a market top. So how does one know if you're close to a market top? Well, there's a couple things you can look forward to. 1 second. Okay. So first of all, what always historically has preceded a major correction in the price of Bitcoin has been a huge run up in the price of Bitcoin. And the reason Bitcoin goes through a correction is because it went on a huge run. So market corrections are not inevitable in any asset. Market corrections happen in an asset because the price of the asset gets ahead of the market adoption of the asset. So the price starts to rise People start seeing it start to rise. People start speculating on that rise, and then the price rises faster than market adoption can keep up. And if that happens, then the price of the asset has to fall back to a sustainable level that reflects underlying market adoption. So, for example, in the first big run up in 2011, which was even before the 4 year cycle happened, the price ran very quickly up to $32 and then crashed to $2. It only crashed to $2 because the run up to $32 had been insane. It went from like 5 cents to $32 very, very, very quickly. And the market just wasn't ready for that. There was not enough people back in 2011 who understand Bitcoin, had studied Bitcoin, understood what the asset was, understood what they held. So as the price started to rise from 5 cents to $32, it went on this wild tear of speculation that adoption worldwide was right around the corner. And when it became clear that wasn't going to happen, it could not sustain $32 and it dropped to $2. Now, notice $2 is still way higher than 5 cents. So if you invested at the front of that, then you went through this $32 and then it dropped to $2. That's only a big drop if you're looking at the very peak of the top from $32. It's a huge rise from 5 cents. So then the same thing happened over the course of a couple of years until 2013 when the price ran to, I believe it was, let me get my numbers here. Uh, $32 went to $2. Oh, then it ran up to $1,200 and dropped to $92. And again, the only reason it dropped to $92, now, mind you, $92 is 46 times as high as $2. So it ran to $32, crashed to $2, ran to $1,200, crashed to $92. Again, the only reason it had to price correct down to 92 was because the market adoption was really marching from $2 up to $92, but the speculation on top of that market adoption drove the price up to $1,200, and then it had to crash back down to the fundamental level of market adoption, which was down at $92. And then the same thing happened. The price ran up to $19,000, came back down to $3,200. And again, that's from $92 at the bottom to $3,200 at the bottom. Then the price went up to $69,000 in 2021, came back to $15,500. Now here we are at $118,000. So again, the only reason these major price corrections happen is because they are preceded by a huge price run. Now, since 2022, Bitcoin has gone on a big run, but it's been slow and steady, relatively. I should say it's been, run up, grind sideways for a long time to sort of digest that. Then run up, grind sideways, run up, grind sideways. So the price rise from 15,500 to 118,000 or whatever it is now, 118, that price rise has been more gradual. And typically, the more gradual it is, the more sustainable it is. People have had a long time to get used to higher prices of Bitcoin at each price along the way. So if somebody told me we had run from $18,000 to $118,000 in 6 months, I would say, get ready for a crash. Like you can't, the marketplace cannot adopt any technology that fast where it suddenly 5Xs in 6 months. That's just no technology gets adopted that fast. Not cell phones, not big screen TVs, not the internet. Nothing gets adopted where it's like 5 times as many people adopt it once the numbers get large in like 6 months. It just doesn't happen. But that has happened pretty steadily over 2023, 2024, and half of 2025. And each of those price rises has had a lot of time to adjust, which James Check calls chop solidation, which is a combination of chopping sideways and consolidating. So James Check calls that chop solidation, consolidating sideways, chop solidation. So what James Check is always looking for, which is why I read his newsletter, it comes out 2 or 3 times a week, why I always read it as soon as it hits my inbox. What he's looking for is, okay, how fast has the price risen? Is it getting ahead of what is sustainable? How much Bitcoin is transacting that represent people wanting to buy and sell at that price? So, for example, let's assume something dumb like eggs. Let's assume eggs sell for $1 per egg. And they go for $1 per egg, and it's been that way for 10 years. And then somebody really wants an egg at 3 o'clock in the morning. And so they meet somebody at the marketplace at 3 a.m. and pay $10 for an egg. Now, you might think as soon as the marketplace opens the next day that the price of eggs is now $10 per egg instead of $1 per egg because someone just paid at 3 a.m. that morning $10 for an egg. And the truth is, no, that was a desperate situation. The price might be higher than $1, but it's not $10. So the same thing in Bitcoin. The fact that the price is 118,000, the question is, yeah, but how much Bitcoin has really transacted at $118,000? Do we have a good sense that there are a lot of people willing to buy Bitcoin at $118,000? Or did we run up to $118,000 so quick that there's hardly anybody transacting? And if you look at the price rises in 2013, 2017, and 2021, most of those price rises were so quick that there just wasn't that many people transacting. There was not a lot to validate that the price belonged way up at those levels because there just wasn't that many people transacting because it was just running up so fast that there wasn't time for people to transact. So James Check looks for things like that. Like, how many people are transacting at this level? How many people have actually paid $118,000 for a Bitcoin? Or is there just a few people paying $118,000 for a Bitcoin, and most people are sitting on their Bitcoin, glad it's at 118, but not selling? So he also looks at how willing are uh, sellers that people have been in profit a long time. So you can tell on the Bitcoin blockchain the last time every Bitcoin moved. You don't know who moved it, but you can tell when it moved. And so he's looking at things like how much people are in profit. So, for example, I know he's got a bunch of, one or two standard deviations, and I'm not going to go figure out the math on that. But let's use round numbers. Let's assume for sake of argument that the average person has a hard time holding on to something once their investment has increased by a value of 10. It's a fair assumption. So he looks at things like, okay, how much higher is the price than the average Bitcoin has transacted on the Bitcoin blockchain? Meaning, how in profit are the people holding Bitcoin right now? Because the more and more in profit those people are, the more likely they are to upgrade their lifestyle, to go on a nice vacation, buy a new car, you know, do an add on to their house, whatever it is they want to do, that might involve spending some Bitcoin. Because if you have a ton of Bitcoin held by people that are seriously in profit, and then the price goes on a huge run, what typically happens is people are like, wow, they start feeling really rich. And they start feeling really rich, and wealthy people spend more money. And so they start spending their Bitcoin. And at some point, they start spending more Bitcoin than the market can absorb by new Bitcoin adopters. And then you see the price correction. And then as the price corrects, people who have borrowed money to buy Bitcoin get wrecked. They get wiped out, so then they have to dump their Bitcoin. So then the price starts dropping more. Speculators who thought they wanted to own it when it was going up decide they have no idea what they own and they want to sell it on the way down because they're scared of it because they don't know what it is. Anyway, you just get that, and then it goes through a price correction. So, are we going to have a price correction? If we do, most people like me would anticipate that a big, significant price rise would happen before that happens. Now, could we price correct 20 or 30% off the 2020 the $123,000 high that we had last week or the week before, sometime in the last like week or two? It went up to 123. Yeah, we could absolutely price correct. 20 or 30% off that level. I don't think we're going to correct 50% or more off that level just because we haven't had a huge uptick, that happened very rapidly yet, unless you want to consider the most recent price rise. But again, the most recent price rise was mostly like, 105 up to 118. And that's just not a huge price rise that you're going to get a massive price correction as a result of that from. So nobody knows. The short take is nobody knows when we're going to get a price correction. If we do, the magnitude of the price correction is heavily a function of how big the price rises were before that happened and how long of consolidation happened to enable the market to digest that new higher price with new market adoption because only 5% of the world owns Bitcoin today. 95% of the world doesn't own Bitcoin today. So that's a ton of people that still need to adopt Bitcoin. But it takes people a long time to understand Bitcoin. I mean, humans just have a hard time understanding completely paradigm shifting new things like Bitcoin. They just do. It just takes people time to understand and adopt. So 50% chance we get a big price correction, but I don't think, again, if we get price corrections off of today's prices, I don't think they're more than 20 or 30%. If we get a big price run, let's call it from 118,000 up to 180,000, let's say we do that. Let's say the 4 year cycle is alive and well. It's only a matter of time, and it's going to peak in late October or early November, like it did in 2017 and 2021. What does that look like? It probably looks like the price running at some point, July, August, September, October, somewhere in there, the price gets a huge uplift from 118 and runs up very quickly to 180,000. If that happens, if we get a price run from 118 to 180,000, that happens in a matter of 6 or 8 weeks, yeah, we're probably going to get a price correction. Now, the reason I don't buy and sell Bitcoin anticipating things like that is we don't know. Is the run up going to be to 160, 165, 175, 180, 190, 210, 220? Nobody knows. Most people think if we get a very aggressive price rise, I don't know anybody predicting before the end of October it's going to go above 240, which would be double the current price of 118. I don't know anybody that thinks it's going to run quicker, just because, again, I mean, we're a $2.5 trillion asset. So you got to have a $2.5 trillion asset turning into a $5 trillion asset in a matter of months. That's just very, I mean, it's very difficult for things that are already as big as Bitcoin at 2.5 trillion in total size. It's very difficult for people, things like that, to suddenly boom, you know, double in size just like in a matter of months. It's just, again, it's hard. That requires so much money dumping into Bitcoin to drive the price higher by new adoption that you just typically don't get that. But if that happens, if we ran to 240 and somebody said, what happens next? I would say, get ready for a 50% price correction. We're probably coming back to 120 very temporarily. Now you might think, well, I'll just wait and buy it after the price correction. The problem is, if we run up to 240, where are we going to correct to? You don't know. Is it going to be 120? What if it's 130 and you're waiting for 120? You totally miss out. What if it's 140 and you're waiting for 130? You totally miss out. Nobody knows. See, nobody knows where the peaks are, and nobody knows where the valleys are, which means the only thing you can really do is just buy Bitcoin and sit on it for as long as conceivably possible, which is what I always recommend to people. Just buy Bitcoin, sit on it for as long as conceivably possible. That's the only thing that has ever consistently worked, because you don't know what high is, you don't know what low is. So, are we going to get a price correction 50-50? How will we know? If there's a huge price rise, the higher the price goes very quickly, the higher the likelihood of a significant price correction, because the adoption in the marketplace just can't sustain that aggressive of a very quick price rise. That's just the way things work. Um, so are we going to get a big price rise? I think we're going to get additional price increases between now and the end of the year. Um, and is there going to be a price correction? It depends on how big the price rise is. A bigger price rise means the possibility of a greater correction. But again, do not try to time that market, because you will get burned every time. That's what always happens is people try to outsmart the market, and they're like, hey, I'm going to buy it low and then I'm going to sell it high and then I'm going to buy it back low and then I'm going to sell it high. Don't do that. You're going to get burned. Everybody gets burned trying to do that. Um, because you just can't. Humans can't time the market. We can't time highs and lows. There's no way to know what high is. There's no way to tell what low is. Just don't do that. It's just, you're going to get burned. So anyway, it's going to be exciting the rest of the year. I'm going to be reading James Check's newsletter every time it hits. At least usually once a week, he'll do a sort of a deep dive that looks at the marketplace, the likelihood that we're getting close to a top, et cetera, et cetera. And he'll do the same thing in the reverse. If we go through a price correction, he starts the analysis, all kicks in, and he's like, all right, let's talk about it. Are we seeing the behavior of people that are done selling? Or are we seeing the behavior of people who are just getting started selling? Which can give you a sense of like, okay, again, he can't time the bottom, he can't time the tops, he can't do any of that, but he can help you understand likelihoods. So, for example, the last time we went through a price dip, of 30%, which was I think in April. I think we dropped from like I don't know 109 down to 74, temporarily. And he said, look, I think there's a 70% chance we go significantly higher from here. There's a 30% chance it could drop even further. Use your best judgment, which that's all you can do. That's all you can do is offer people that, which is 70% chance we're done selling here down in the 70s and it's a fantastic time to buy. 30% chance we could edge a little lower. And then you just use your best judgment. But again, he's saying the same thing now is, his most recent updates are like, look, I don't think we're at the top. It feels like we got a good ways to run. We'll find out. We'll look at the data. So the best way to find out if we're near a top or bottom is James Check with his Check on Chain newsletter. I typically post the ones that are most relevant with a few highlights. If you want the full meal deal, it costs $29 a month, which it's the only thing I subscribe to in the Bitcoin world. Anyway, it's the only analyst I trust, the only one I think that's worth anything. So James Check is the best guide for whether we're near the tops or bottoms, and we'll continue to do videos. Hopefully, those are helpful. And I feel like if somebody said, where are we going to go between now and the end of October, I would say at least 140 to 160. Um, and then depending on how quickly we get there, what news stories are announced while we get there. Because if there's, again, yesterday, Coinbase announced, I think, of PNC Bank, a major partnership that PNC Bank customers are going to be able to buy Bitcoin using Coinbase. So it's like, okay, if you get major announcements from Coinbase and or River and major financial institutions that are going to make it super easy for average people to walk in a bank branch and buy Bitcoin, yeah, well, suddenly 160 or 180 is way more sustainable than if you just run up there, with no new major news stories of adoption. But anyway, hope all that helps. Have a great day, everyone. I'm here to help in any way I can. Thanks.